So let's take a look at some information that will give you an introduction to those fundamentals. The first thing we will have to look at is the role played by central banks. Now, a central bank is an institution that is responsible for the setting of a country's monetary policy. And what that means is that it is their job to make sure that the economy is stable and growing. For example, the Federal Reserve is the central bank of the US, the ECB is the central bank of Europe, the Bank of England is the bank for the UK, and so on. Now, all developed nations have a central bank, and the actions of a central bank directly influence the price movements of a country's currency. This is why central banks are so important to watch for all Forex traders. Everything they do impacts the trades we take and how we navigate the markets. Now let's remember that this process is actually quite simple, so before we get carried away about worrying about all the policies and intricacies of the central bank, all we really need to understand is what the bank is thinking at any given time. Now we'll explain this further as we go, but for now it is important to appreciate when analyzing the central bank that there are only one or maybe two things that you need to be looking at any given time. So why do we need to know what the central bank is thinking? Well, if we know what they are thinking, or what they are happy with, or what they are unhappy with, we can use this information to try and predict what they might do next. And these actions will move the price of those respective currencies, thus giving us good trading opportunities. Now this is the overall theme that I want you to have in your mind as we go through the rest of this course. So first of all, we need to be looking at the same things that a central bank is looking at when deciding if they want to be concerned or happy about the current state of the economy. The things that the bank looks at are called economic indicators, and these indicators, as the name suggests, literally indicate which parts of the economy are doing well and which parts need some assistance from the bank. So what indicators do the bank use to gauge the state of the economy? Now let's take a look so we can understand exactly what they mean and how they impact the bank's view.